the theme of this pod is really about how to save thousands of dollars a year by a 12 monthly checkup. But when you do a 12 monthly checkup on your property, maybe there is some opportunity cost in there in terms of like what you could do, and checking market conditions can allow you to see opportunity costs as well, right? So like what should we be looking for in market conditions to understand opportunity cost of like buying, selling, reinvesting equity, pulling it out, stuff like that?
Yeah, so for say most property investors, say Jane, the property investor from down the street,
your sister.
that name just came to mind. Obviously, it's a subconscious thought that they aren't in the market every day. So this is obviously where the value of a good quality advisor who is with you along your journey. They pay dividends, and it's not just the fee that you pay them to buy your property up front. It's that continuous service throughout your journey and having someone just to touch base with, because it's a simple text message, a simple 1 minute phone call, and where I guess we're going with the market conditions is, as I said throughout this podcast journey, is markets grow in different at different times and in different areas throughout Australia. So when I'm investing for clients, we see good growth in this X location, and it might get that good kicker in over a 6 to 10 year period, but then it could get to that stage where all that's plateauing. So what can we do with that property? Is that a hold? Is it a sell and buy somewhere else strategy? So just preparing that, and every 12 months, because going back to what I said earlier, is like it might not be what's warranted now, but we could be, or well, actually we're seeing that could be a viable option in 12 months time. So then your mind start getting ticking. Property can be passive, but if you're active in any investment strategy, you're going to outperform the market. So just thinking that, and that's what I like to sort of hit on is market conditions, understanding those supply demand factors, and maximizing your return on investment is what we're all about.
Huge. Like just thinking about it, like if you're in an area that you bought on a home on a block of land that's got some decent land, and then it starts to get really busy over the coming years, and then one year you just realize, people are splitting their blocks up, and they're selling the back as a piece of land, or they're splitting their blocks up and they're putting a dwelling on it and then selling that as a house. That's something you can check every 12 months, like is the market condition of where you're at, and what's out there in terms of comparables, and what people have done with homes or assets that are similar to yours that have grown them or renovated them or subdivided and whatnot. That could make you a lot more than a couple of $1,000s a year.
That's a really good point. Actually, we didn't put that one down when we're having a chat. And well done. Yeah, the town planning changes. On your property. I mean, we're here for a long period of time, and plans change quite regularly. Every couple of years, the council are bringing out new town plans, new zoning to obviously accommodate for the increasing population. How can you maximise that? You don't know unless you're looking.
Yeah, I don't know if I mentioned it in this pod. I think I might have been talking to our mate Parker about it, or somebody around the plans for short-term rentals as well in certain areas. I know in Palm Beach there's some areas that you can do short-term rentals and some that you can't. Maybe there's an opportunity where you can start doing short-term rentals in your area, and you do a quick little reno to your property, and you might be in the stage of life where you're like, I don't really want to live here anymore. I want to live closer to friends or family or the beach or out,
bigger house.
Bigger house. Yeah, pool. All these, your family might be expanding. You might need to live somewhere else. Maybe there's an opportunity for you to do some short-term rentals by Airbnb-ing that place, doing a quick little reno, making the kitchen look sexy, and then doing that. So that could save you a bunch of money in repayments if you go away and buy another PPOR.
No, that's a really good point. Well, it kind of wraps most of it up. Other than the insurance is another thing that's always good to check.
Yearly insurance.
Anything that you have a yearly fee. It's anything in life. I say is just it won't save you thousands, because obviously there's a limitation. Generally, from a house, insurance premiums range between $1,200 to $5,000, depending on what you're into. Some actually had one the other day, but it was It was multi-unit complex commercial residential mix, and there was $9,875 in insurance. That killed the cash flow, but anyway.
It did kill the cash flow, even though it's commercial.
Look, oh yeah, opportunities. There was a different play because there was two lots. You could, there was the commercials in the front lot. There was a vacant lot in the back, which they could actually increase the rent through storage and things like that. And then, or you just sell off that back lot, you make that 250K in land, and then your cash flow goes from, I think it was like a 4.5% net to 11%. Well, selling off that asset.
That's really cool.
Yeah.
So yeah, back to insurance though.
Yeah. So insurance is just call around, check different insurance providers. I mean, there's similar to, I guess, what we do for clients in, finding the best sales agent and the best buyer's agent. You can go on, like, compare the market type vibe, where they just go and assess the different options available to you and present that, and you make that educated decision from there. With insurance, it obviously won't save you thousands, but the combination of checking your finance, checking with your property manager and the service they're providing, increasing your rents if it's warranted, the value of the property and your alternative options, with what else can you do with maintenance, we covered, and then checking into the market conditions along with insurance. That is going to save you thousands of dollars every single year and help you amplify your portfolio growth, which is going to get you closer to your goal of financial independence.
So relevant to the times now, time of recording in 2023, where interest rates are higher than they have been, and many property investors that have gotten in the last year or two may not actually be positively geared, but making these changes in a year time, or in a year and a half or 2 years time, can actually possibly take you from negatively geared to positively geared, which can help them have a better borrowing capacity to go again. So it's pretty big. They might seem quite small, like, just change the interest rate, and just check out how your property manager's doing, and looking at these things, it might seem like super little steps, but like all of that compounded, like you're saying, can be like phenomenal for your growth. If you, like you said, you're going to outperform the market because you're being active. So that's a really good point.
Yeah, once again, you overestimate what you can do in 12 months, but you underestimate what you can do in 10 years, and that compounding effect of those little tweaks you do along the way, your future self will thank you for it.
Yeah.
Might leave that on this note. Good note. Top note.
Top notch note. Thanks for listening, guys.